In this video, we're going to have an introduction to auction market theory. Stay tuned. Hey traders, a very warm welcome to you. So auction market theory, what's it all about? Let's have a look. First of all, I am not a real student of this. I like the concept, I understand the concept, and I apply the concept. I don't dig really into it. I'm not one of these guys who really tunnels down into it, but I'm going to show you what I know about auction market theory. And as always, if you're an expert in it, comments below and maybe we'll do an updated video on it. So I like this because this is how markets kind of work. It's a theory of how they work and it makes sense to me. So let's look at analogy. An analogy could be we have a vehicle, right? It's a specific vehicle. It's a new car. And it is, let's say it's a BMW 5 Series, right? It's the same, it's the same engine spec, it's the same trim, everything's identical for it. And let's say the value of that is, I don't know what's a 5 Series these days, 45k with a few options on it, right? So £45,000 is for this BMW 5 Series. That's the price of it. You've got dealers and they're selling you for £45,000 with these specific options on and exactly the same spec, okay? Now, buyers coming in and they're saying, hey, I'll buy that BMW 5 Series, and the price is kind of doing this. So let's get a blue pen out so we can see it a bit better. So we've got this 45,000 is our price, and it's kind of doing this, right? We've got dealers all over the country who are selling it right a little bit of a premium, maybe they're adding a little bit onto it. You've got guys who are maybe getting a bit of a discount on the screen price. So they're going in and saying, hey, would you throw in, you know, the kind of tow bar pack for free, and of course that drops the price down. But you're kind of getting an average of 45,000. Some people are paying a bit more, some people are paying a bit less, but you get the idea. Now that is considered as value. Sellers of it are happy to get 45,000 for it. Buyers are happy to pay 45,000. Now, how do you incentivize buyers and sellers? Or what is the incentive of buyers or sellers? If you're a buyer, and again, let's forget about the market for a second. If you're buying this BMW 5 Series, what is your incentive? Your incentive is to buy this car for as cheaply as possible, right? You do not want to pay. You want the car, but you need to buy it as cheaply as possible. And just think as well, this is a good time to think about it, how if you want it quickly, you might well pay a premium. That might be why people are paying 47, because they might say, you know what, I've got one here and it's the same color you want, it's the same spec you want, but you're gonna have to pay a premium for it. Otherwise you're gonna have to wait whatever lead time it is to get it from the factory. And you might say, no, I want it now, I'll pay for whatever it is for it. I'll pay 47 for it, 48 for it. And you get that kind of thing in the market as well. But if you're just happy to wait, you're happy to pay 45, 44, whatever, then this is the kind of value. And you want to get it as cheaply as possible, unless you need it urgently, in which case you want to execute as quick as possible, but you're prepared to pay a premium. That's how we get markets to move. We'll go on that in a second. From a seller's perspective, if you're a dealership or a factory, whatever, and okay, we're using BMW here, could be anybody who has this inventory, you want to sell it for as much as possible. You don't want to sell it for 43, 42, 41, it erodes your margins. You want to sell it for 45, 46, you'd sell it for 50,000 if you could, but you know that that's the fair value for it here. Now, we get a situation where, let's say all of a sudden, there's a massive amount of BMW 5 Series with this particular spec come on the market, and dealers are saying, well, you know what, I've suddenly got a massive load of stock in the compound in the back. A dealer down the road has got a load of stock. I need to get rid of this stock. You know, I need to take a haircut on this a little bit and get rid of it because there's a new 5 Series coming out, or 5 Series are struggling, or there's a thing about diesel, whatever. You know, you get the point. All of a sudden, you're going to have some dealer says, you know what, I've got a special on 5 Series, guys. They're now 39,000 with those options. And all of a sudden, we have price then starts to go lower, because buyers, as price comes down here, and assuming that's the price, we've got this dealer now offering 5 Series for 39,000. Price goes lower because everybody in the local area goes, hey, you know what, I can get my 5 Series for 6 grand less. I'm going to go there, I'm going to buy it. Price gets lower. All of a sudden, you know, buyers, if there's a load of buyers there, what they're going to do, if they're waiting and they wanted to buy a 5 Series, that might be enough to trigger them to buy it. You know, they might be in the market for a 5 Series, but they're 45 is too much. I'm not paying 45 for it. Well, 39, I've seen the advert in the paper, I'm going to go and buy one. Go out there, they go buy one. Maybe they buy all the ones from that dealer and we start to then push back up to that 45 level. So that was a little bit of excursion away from value. It excited some buyers and then we push back up to the 45 level. Maybe now other dealers have seen that and we get 2 or 3 dealers dropping it down to 30, 39. So we come down again. At this point, maybe there aren't so many buyers. People are seeing the advert again and saying, you know what, that's actually pretty much, I saw that last time, it's not that special. And so we create maybe a new value area. And that new value area is where all of the dealers now are saying, well, you know what, we can't get 45 because, you know, Ben, Fred, John and Mary's dealership are all offering it for 39. We're never going to get 45. So the new value becomes 39,000. And you can see how, you know, sellers have to move and adjust and buyers have to move and adjust. And then we could look at it in a complete different scenario as well. So that's, you know, one scenario we're pushing away from value to the downside. Let's imagine now, you know, we've got the 45,000, loads of people are buying 45,000. All of a sudden, you know, that engine is not going to be made anymore. It's a very economical engine or very powerful engine, whatever you want to look at it, which has been reviewed very, very favorably and there's not much stock available or there's a specific color or whatever. Again, scarcity and buyers say, you know what, I like that. Dealers recognize this. What the sellers want to do, they want to get a higher price. They start offering it at 50,000. Buyers are stepping up and there's still exchange of goods there as there is in a trade. There's still two-way flow and buyers are still prepared to pay 50. Dealers will push it as much as they dare, won't they? They go 50, 51, 52 until there's no more buyers. And then they'll come down and they'll find a new value area where people are prepared to pay that price for that particular item. Up a bit, down a bit, up a bit, down a bit. You're moving, you've got a value area there, then you've got a new value area there. Maybe something comes out and says, you know what, this thing's the most dangerous thing on the road. It's failed all its end caps, it's absolutely deadly. What's going to happen to price? Of course, we're going to go straight down and we're going to find the level where, you know what, people say, well, even if it's deadly, it's still worth 20,000. I'm being extreme here, but you get the point. There's still some value to it. I don't mind riding around in a deadly car if I'm getting it at half price. Some people will say that. And of course, you know, that's when we'll find a new value and then maybe we'll creep back up because over time people think actually this is a non-story. It's really still worth what it was, which is between 39 and 50. So price then starts to creep back up. The point is, I could go on and on here, guys, with analogies, but the point is, this is how auction market theory is working. You've got a specific good, a very, very specific good or product or service, whatever it may be. Obviously in the market, it's one share of stock or it's one futures contract or it's a CFD, whatever it may be. And we've got a bunch of sellers selling it and a bunch of buyers buying it. And we've got guys who are on the sidelines who are interested in selling it and guys on the sidelines who are interested in buying it. And we're always rotating between those 4 groups. So like we had in this analogy here with this BMW, it could be anything, it could be Apples, it could be anything. We just use BMW here as an example, a specific BMW. We had a value of price, people were agreeing on price, and this is kind of the congestion that we get. And then we get a move out into a new value area because something or someone perceives it as being better. It doesn't have to be an external news. It's just buyers then maybe you know, are more keen to buy it, perhaps you know, whatever it may be. There's always something that makes buyers step in and think they want to buy it and pay more for it and pay more for it. And then we saw the other condition where, you know, there was a news that came out, there was something that came out. That could be interest rates in the currency pair, that could be kind of a harvest if we're talking about commodity. It could be anything like that. Revalued the price to a new price level, a new acceptance level of value. And then we saw the uptrend from that, and when people started to think actually it's still worth what it was, let's push back. So it's the psychology and the move from value back to value, away from value back to value, new value, which is kind of the thought behind this auction market theory process. It's what is value, what do people consider as value, where the next level of value is, what happens when we move away from value. Most often we'll come back to a value area. We'll keep doing that until we kind of probe, until we find a new value area, then that will start again, then we'll maybe find another value area, maybe we'll come back to the old one. And it's that kind of rotation of the market and movement of the market that represents this auction market theory. Anyway, guys, let me know your thoughts in the comments section below. Have I missed something out? Please feel free to add it below and, you know, enter your thoughts there. If you like the video, give it a thumbs up and don't forget to subscribe for more videos from myself and other traders on this channel. Take care. Good trading. Keep the risk managed, guys. See you in the next one. Bye-bye.